Hello, this is Eric O'Neill, January CPA, author of the Gainology book series. I want to give you a tax update today. I've been doing tax for 27 years and the tax law is changing. And COVID inspired some additional changes that we should be aware of. And I want to help you pay the minimal amount of tax that's due, and hopefully that'll increase your refund. And today, I'm going to do a very, very brief and abbreviated update on some of the major changes from 2021 to 2020. And here, this is February the 1st. So we're talking about filing your 2021 tax returns. And so these are some of the changes. The first change that I want to discuss is the early withdrawal penalty is back. And what that means is for all of you all that took advantage of, or if you wanted to, for all of you all that took advantage of being able to take $100,000 out of your tax deferred account, whether it was an IRA or 401k or any of these plans that are administered by some sort of administrator, you were able to take up to $100,000 out of your account and not incur the penalty for taking money out before the age of 59. And the penalty is 10% of the tax. And as a consequence, when you took that money out, it was still taxable. The benefit was that you didn't have to pay the 10% penalty, and you could elect to defer the amount of tax over the course of 3 years. So if you took money out in 2020, you're going to have a tax payment that's going to be due, and you're going to have additional tax payments that are due. But you cannot do that in 2021. You cannot take money out of your retirement account and have any of the liability for the early withdrawal penalty reduced or deferred. So it's back. The early withdrawal penalty is back. Next thing that I want to discuss. Support our restaurants. If you are a business, and the businesses that I'm speaking of now are basically the ones that show up on your individual tax returns. Those that are on Schedule C specifically, and then also on Schedule E. Now, for people that own real estate, if you own a limited liability company and you're paying self-employment tax because you're a single member limited liability company, you can write off 100% of the cost of all of your business meals. This is significant because in previous year you could only write off 60%, 50% of it. So take advantage of that. Support some businesses, particularly the businesses in areas that were really impacted by the coronavirus shutdowns. So go and support them and write off 100% of every business meal. All right. Next, you can defer this if you're self-employed again, and you have a sole proprietorship or a limited liability company, and you're a single member LLC. You cannot defer any portion of the 15.3% tax that we call the self-employment tax. And what is that self-employment tax briefly? When you work on a job, or if you worked on a job, your employer would have to pay half of your Social Security tax. Half of the Social Security tax is 7.65%. The other 7.65% you would be responsible to pay. But if you are self-employed, you are responsible for paying 100% of that tax. If you earn $10,000, that would be a $1,530 tax that you'd have to pay. That tax can really multiply. So Congress in 2020, because they recognized that many businesses were struggling, the economy had shut down, they said, hey, let's give them a break and let's see if we can help allow them to defer a portion of the self-employment tax. Well, that provision is gone. You can't defer any more of the self-employment tax. If you're self-employed, you have to pay 100% of the tax in 2021. Next, the Advanced Child Tax Credit. That was something that was totally new. I think they just thought of something out the blue and said, okay, on July the 15th, everybody that had children under a certain income, we're going to start mailing them checks. If you had say for instance, 2 children, and one of the children was 16 years old and another was 6 years old or 5 years old on the previous tax return, they started mailing you checks on July the 15th if you qualified. For that the older child, you're going to get a $300 check every period. And for the younger children, you got children, you got a $300 check, and for the older child, you actually got a $250 check. Excuse me, I'm mumbling my words, but I'm trying to be brief. But that Advanced Child Tax Credit, The question is any of it taxable? And if you fall within some of these brackets, if your income is above these brackets, you're going to have to repay the full amount of the tax. But if your income is beneath any of these brackets, you're not going to have to repay any of that tax. So that's a benefit for everybody that doesn't have to repay it. And unfortunately for many of us that are getting left out and experiencing further discrimination, we have to pay that tax. All right. Next, the child tax credit. It is finally like the earned income credit. It is fully refundable. So in previous years, if you had a child tax credit and it would have increased your refund, you couldn't get that on your refund. This year, you will be able to get it on your refund because it is like the earned income credit. So, next thing, unemployed. This was a big deal in the previous year. So many people were laid off and had reduced hours as a result of COVID. And as a result of that, Congress said, hey, let's help these people out and let's allow them to not have to pay taxes on the first $10,200 of income that they got from the unemployment office in their particular state. Well, Congress said the party is over. If you are unemployed in 2021, you will have to pay all of the tax that's associated with that unemployment. There are no more free rides. They said the economy is coming back. We pumped a ton of money in it. Hopefully you got a job because we're going to tax you if you're unemployed and you have to pay the full amount. Next, don't stop giving. When Congress revised the Tax Act in 2017, something happened. It was a major revision, the most major revision I've seen in 25 years of helping people get ahead with their taxes and their investments and their finances. It was the most major revision that I have actually lived through, other than the one in 1986 when I was prior to me going to college. This revision allowed people to deduct. They increased their standard deductions. If you're married, filing joint, whether or a head of household or single, what the law did is increase the standard deduction. They increased that standard deduction so much that many charities worried that people wouldn't continue to give because charitable contributions show up on your itemized deductions. And so they thought people were going to stop giving. So they changed the provision, and this is significant. And what it does, it allows you to deduct 100% of your adjusted gross income on your tax return. So if you had an AGI, adjusted gross income of $100,000, now you can deduct that entire amount on your tax return. Previously, you could only deduct up to 50% of your adjusted gross income. So that is a major revision. And then they also played with some figures of $300 above the line and below the line deduction this previous year, but that's not real significant, but it can help. And then finally, the education credit and tuition and fees, that was eliminated. You can no longer write off the tuition and fees deduction on your tax return. So this was my update for individuals. Now, I go into further detail, and as I said, I just want to be rushed because this is something I'm putting out for everybody to see. But I'm having a seminar that's upcoming that's going to talk about real estate taxation, all of the ins and outs of real estate if you want to be a realtor. And I'll show you how to potentially reduce your taxes by up to 20% legally if you're in the real estate game. And we'll talk about that and some other things. But tune into my website. Once again, this is Eric O'Neal January, CPA, author of the Gainology book series. And I just wanted to share some of the updates that you need to be aware of going into filing your tax return for 2021. If you have any questions, feel free to reach out to me at 877-KINDA-DO-IT or log on to our website at conduitadvisors.com. Thank you so much, and please share the video.